What's up, y'all? It's your boy Alex with a major stock lesson for y'all. So it's not just stocks, but like charts in general. So you might have heard of the candlestick chart, or some people call them the Japanese candlestick chart. And you'd be looking at it like, what does this even mean? There's a whole bunch of lines, a whole bunch of information. But it's actually a good thing, and it's a lot easier to understand than you might think. So I'm gonna get y'all to be masters of understanding and reading these charts in like real quick, maybe 1 to 3 minutes. So if y'all want that 1 minute real quick lesson, just skip to the end. Maybe I can put a link for you to click right here. But if you want a whole video showing you in like 6 minutes, going real in depth, just watch through. I'm gonna move over to my computer screen so y'all can see what I'm looking at. All right, so we're looking at my screen now, and this is what the Japanese candlestick chart looks like. And I know this is a lot of new, different information that looks kind of crazy, but really it's just a regular chart that has a little bit more information on it to help you out. So this is probably what the normal charts that you're used to looking at looks like. And you can tell that they're pretty similar. They're basically the same, besides the candle has a little bit more movement. What the candlestick does is show you all the price movement within each timestamp. So this is a timestamp of 1 minute. In that 1 minute, it opened at 1412, dropped down to 1411, and ended up at 1415. So the beginning of the minute is what we call the open. The end of the minute is what we call the close. And you don't see everything in between with a regular line chart. You just see the open and close. You don't see the in between. You don't see the high and low. So that's the main difference between line and candlestick. Everybody knows green means it made money and red means it lost money. That's exactly what these are saying. And so it's a little bit confusing at first, but green, you're reading from open to close on green and red. So green, open is at the bottom and close is at the top because it made money. Red, open is at the top and close is at the bottom because it lost money. So you're reading it in the same direction as the regular line chart, but there's just a little bit more information on the movement in between. And it doesn't have to be 1 minute. So if I can go to a 5-day, 5-minute chart. That means each candle is 5 minutes of time, where this is the open and this is the close and this is the high of 5 minutes. So candlesticks are actually really useful for longer time periods. If I want to look at a weekly basis, this is the high of the week, the low of the week, the open of the week, and the close of the week. So a regular line chart will only show you the open of the week and the close of the week. We see the week of October 21st opened here and closed here. So, it lost money that week, but we don't see what's all the movement in between is. So the information of the in-between prices is really important when it comes to day trading, because we see what the actual limit resistance price is. It's not here, it's actually here. So the margin for profit here is actually more. If I bought here, I can sell here. The margin for profit is 0.15%. But a line chart will make you think that the margin for profit is only 0.11%. Now, getting into the candles more specifically, what are these things? What are these things that look like crosses? So a white candle just means that the open and close were the same price. So it opened at $14.49 and closed at $14.49. But the line in between, the wick of the candle, it moved a lot too. So even though it opened and closed at the same price, there was still movement in between that minute of price. If you see a gray candle that has no wick, like this one here, that just means that it opened here at 1444, closed at 1444, and there was no movement in between. So again, reading, how would I read this chart, this section of the chart? Well, I'll start from here. It opened at this price, dropped down to 1424, came up a little bit, 1425, closed. This one opened here, dropped down a little bit, 1 cent, moved all the way up 3 cents, came back down a little bit, opened here, moved up, closed here. Jumped a little bit, opened here, moved down a little bit, but came all the way back up a little bit, moved down a fraction of a cent, and then opened here. So the open and close are generally going to be touching. So this is the close price, this is the open price. They're generally going to be touching, but sometimes that's not the case because prices jump within that fraction of a second. So here, even though it closed here, the open for this one isn't touching because it just jumped down, moved up a little bit, came down, and moved over here. Like right here, it jumped down a little bit in that. There was probably one trade that made the price jump down, and it lost a little bit, but then came all the way back up, closed, jumped down a little bit. So that's basically the flow of the chart. Now I'm gonna throw up some pictures so y'all can see. Maybe you can take some screenshots of this to help you like understand. You can save it and look at it. So again, on a red candle, the open price is at the top and the close price is at the bottom of the fat part, and the wick on the bottom side is the low point. And if there was a wick up here, that would just mean that there was an upward movement. But the open and close was negative. It lost money, opened here and closed here. And on a green candle, the open is at the bottom. We have our low point. It initially looked like it was going to lose money, but it came all the way back up and closed at the top. So you read green from bottom to top, and you read red candles from top to bottom. And gray candles or gray lines just means that they opened and closed at the same price. So I hope you guys grasp that concept. It's pretty simple. If not, just take those screenshots like I said and just look over it and you'll get it pretty quick.